Welcome back to another video. I could not upload last week because I actually went to my hometown and my brother had construction at his place. They need to fix his gate, so that was the reason why I could not upload in the entire week. But I'm back, and in this video I'm actually going to be teaching you guys how I take my trades and the confluence, the complete confluence I see before actually taking any trade. So without much talk, let's get to the video of today. So if you have been following the Mena Educate playlist, you will observe that I've only shared the structure liquidity entry and the engineer liquidity entry. But in today's video, I'm not only going to be giving you a new entry model, but I'll also give you guys the full confluence, what I look for before actually placing any trade, and what actually gives me more confidence to place any trade. So for the structure liquidity, I look for the order block, the inducement, the break of structure, right? Except for the engineer liquidity, there is no break of structure. But then there is something that I actually still look for, which is the fair value gap. Now these concepts are from SMC, right, which is smart money concept. But also I add support and resistance. Now, though there are two types of support and resistance I mainly use, but the one that I use most of the time is the classic SNR. Okay, it's a classic support and resistance. Classic SNR. So this is basically you adding support and resistance to the SMC concept. All right. Now the classic SNR is a situation whereby, let's say we have a bullish candle, and then as soon as the bullish candle closes, another candlestick forms to be a bearish. The second candle goes down as soon as the bullish candle closes. This point right here is going to be a resistance level to the market. This is going to be a resistance level. Now this is for the candlestick. I'm actually going to show you how it looks like in the line chart, especially if you're a beginner with it. It is very good if you start using it with the line chart. So this is for the resistance, and then this is for the support of it. Let's say we have a bearish candle, and then as soon as the next candlestick open, it pushes to the upside. Okay, so this candle will be green. So this level here is actually a support level. All right, support level, support. Now for the line chart, it can actually form in two ways. For the case of resistance, one can form like this. Let me put it right here. Let me put it here. One can form like this for the line chart. This level is going to be a resistance level. Okay, resistance level, resistance, and it can also form like this. Let me draw it. This level is going to be a resistance level, resistance. Okay, and then for the bullish scenario, which is the support scenario, it can form like this. This is going to be a support for the market. And if you're in my Telegram community, if you just observe each and every trade I drop, you will actually notice similar thing with them if you actually observe them properly. So this is going to be a support level, and then the support can also form like this. Yes, support. The support can also form like this. Okay, support coming. Hold on. This is going to be a support level. So this is for the support and resistance in combination with the smart money concept. Okay. Now the second type of entry model I actually have is the RBS, is support becoming resistance or resistance becoming support. I'm going to explain everything on the chart to you, but I'm just showing you guys the illustration. Now the RBS, there are a lot of things that go into place to actually trading the RBS. So this is what the RBS looks like. This is the RBS for the bullish, RBS for bullish, RBS for the bullish scenario. Okay. Now the RBS most of the time do not have inducement or break of structure, this and that. No, the RBS is that you are actually trading the retracement. The retracement, that is what you are trading. Retracement of the market. Okay, as soon as it break a significant high, you are trading the pullback of it, and it must be with the market direction. It must be with the market direction. Okay, this is the RBS for the bullish scenario, and then for the bearish scenario, it's just the same thing. As soon as sometimes it may not even go very further away, as soon as it passes it, you are trading the retracement to take it down. Okay, then this one is going to be SBR, which means support has now become resistance. And I'm also going to be telling you where to put your stop loss in the case of the RBS. Okay, put your entry there, then you can put your take profits wherever you want to put your take profit. So let me actually go to the chart. Let me show you guys all these things, and let me actually explain it more. So here in this Nasdaq trade, if I actually go to the first place, which means before the market actually formed. So I want to show you something from there. So this was before of the trade you just saw on the trading view. So what I traded here is that as soon as the market broke this high with a candle body, there is no need for me waiting for inducement or break of structure. I'm trading the retracement of the candle. Okay, I'm trading the retracement. So as soon as market come back to this zone, that is where I'm looking forward to buy. So I have my first entry, I have my second entry, but have it in the back of your mind that the entry must be in line with the market direction. It's very, very vital for the RBS entry. So let me go to trading view. Let me actually explain it to you. And if you look closely, you observe that this is exactly the classic SNR I talked about. We have a bullish candle, and then the next candle that opens form a bearish candle to the downside, right? So as soon as price broke this high with a candle body, all I'm waiting for is the retracement of it. Okay, let me zoom in. All I was waiting for is the retracement of it. Okay, because this little candle you see here, if price breaks it, this little candle is going to form a support, because at this point it was a resistance, though it was not a major resistance. But if price breaks it with a candle body, the retracement of it is going to form a support. So this is for the RBS entry model, and you can also see that it is the classic support and resistance that form there. And the reason why I said you should switch from candlestick to line chart if you want to understand it more as a beginner is if you switch from candle to line chart, you actually see the tip of it there. All right, so you can mark your entry from this very tip. All right, to be safe, because though this particular one did not actually touch the tip or the teeth. Let me see. So though this particular one do not actually touch the tip of the candle, it is very, very safe for you to put your entry at the tip of the candle, especially as a beginner. So you switch from candlestick to line chart, then you will see it there. All right, this one is for the classic SNR and the RBS entry model. So let me actually go to the structural liquidity entry model. Let me explain to you why it's very important for you to see a fair value gap in the entry model before you actually take the trade. And also, among everything that I listed, which is the fair value gap, the inducements, and everything, there is one that is actually an exception, which means if you don't see that one, it is still okay for you to take the trade. Okay, so let me go to a trade that I actually took on BTC. Let me show it to you. So here is a trade I took on BTC, correct? And the reason why I always love to actually explain things to you with trade that I've taken is not just to show you that what I'm teaching you is actually working, but it's just to show you how you can actually do it in the live chart. All right. So this is the structural liquidity entry model, right? Or actually, this is the engineer liquidity entry model, because there's no break of structure of this recent high. We only have the inducement, but there's no break of structure, right? So if you look closely, you are going to see that there's a fair value gap here. Okay, I'm going to show you the fair value gap in most of all the trades. All right, the fair value gap does not have to be in all the trades. If the fair value gap is not there, you can still take the trade, but most of the time there are going to be a fair value gap closer to your inducement. There is going to be a fair value gap close to your inducement most of the time. Okay, but if it is not there, you can also take the trade. All right, so if you look closely, there's one order block here, there's another order block here. All right, but then let me just switch from the candlestick chart to the line chart. Now from the candlestick chart, this is actually the support of the market, right? This is the support of the market. This is what I drew for you in the illustration as what a support is. Okay, so all you have to do is to put your entry at this particular place. But the reason why I put my entry here was that I actually gave the market enough space, and I put my stop loss a little bit below this candle. So if you don't understand it more in the candlestick chart, you can switch from candle to line. And if you look closely, this is exactly the same thing I drew for you as a support level. We have a bearish candle, and then though we do have a wick of it, the market opening, the body of the candle is at the same level with the body of the bearish before it actually moves to the upside. So this classic SNR actually form a support level for the market to come tap in. All right, so in the case of the structural liquidity, whereby you mark the top of the order block, is if you have one order block. Let me write it. If you only have one order block, then you can mark it. But if you have two order block, then mark the second one. Okay, so this is it for the classic SNR and SMC Confluence. So you have your inducements, you have your fair value gap, you have your break of structure, your general liquidity, whichever you are using. Okay, so let me go to other trades on BTC. Let me actually show you the importance of having the fair value gap. Now, just like I said, the fair value gap does not have to be there always, but if it is close to your inducements, it just make a lot of things, like it just add to your confluence. Okay, you just add to your confluence. That is it. So we can see that there's a fair value gap here. There's a fair value gap here, right? Fair value gap here. And where did I take my entry from? Again, it is from the classic SNR entry. We have this bearish candle, the next candle opens, form bullish, right? And to understand it, just switch from candle to line. You are going to see there what I drew for you, that this is going to be a resistance level, right? This is going to be a resistance level. I do something like this for you, that is going to be a resistance level, right? And that's exactly what you are seeing here. We have this candle comes, then we have this pull up, market trade down, pass it. So that is a resistance level. So if you don't understand it well with the candle, all you just have to do is switch to line chart. So we have a fair value gap close to my entry. That's why I take my entry there, right? So my entry was actually from here. Okay. And then this one, we have a fair value gap also close to my entry. Fair value gap close to it, right? Let me go to one more trade. And this one, just like I said, if there's no fair value gap, you can also take the trade, but most of the time there are going to be a fair value gap. This one does not have a fair value gap, but among the 5 trades or 3 trades that I've shown you, there has been fair value gap in them. Okay, this one have a large fair value gap. So let me actually go to gold trade. I took one trade on gold last week Friday. Yes, last week Friday. Okay, last week Friday. This is a 12 risk to reward trade, right? Now, there's one order block here. There's another order block here, right? But if you look closely, this order block actually mitigated this one, all right? So this order block is now safe. Assuming that this order block did not mitigate any other block, my entry would have been here. But because this order block has mitigated this one, this order block is now safe. So this is the unmitigated order block we have. And then secondly, we have one fair value gap close to this order block. We have one fair value gap before it, and then we have another fair value gap in it. And just like I said, we have one bullish candle, the next candle form bearish. And if you switch from candle to line, we're going to see the same thing there, this V shape. Okay, so that is it for the SNR and the smart money concept. All you just have to do is you add the classic SNR to your trading Confluence, which is the smart money concept. And always remember to practice each and everything you learn from this YouTube channel. You should practice it over time. You come back, you practice it. And also, I'm going to be sending all these entry model, I'm going to be sending them in the Telegram channel. And if you are not my Telegram channel, just click on the description. You are going to see the link to the Telegram channel so you can join. I'll be sending all these entry model in the Telegram channel, so you can save them in your phone or you can save them in your laptop so that you can come back to them and use them every time you see a setup. Okay, so that is it for my complete Confluence. I just had the support and resistance, which is the SNR to SMC trading. Okay, if you're already familiar with SMC, this is going to be very, very simple and very easy too. Or if you have been watching the Mena Educate playlist where I talk about the structural liquidity and my entry model, this video is going to be very, very useful to you. So if you want to understand this video more, you can go back to the playlist and start watching from the very first video I uploaded in that playlist. If you find this video helpful, do it to subscribe, and see you guys in my next video.